Hello again, everybody. Thank you for coming back so promptly from the coffee. I know that we're running a little bit behind schedule. It's inevitable that happens. But thank you very much for joining us. I'm very pleased to be able to welcome to the stage now Clemente del Valle of the development of the Colombian Development Bank, FDN. Those of you who read The Economist, I'm sure most of you do, will have read a couple of weeks ago a very interesting article about FDN and some of the innovations that it's responsible for. In the previous panel, we spoke about the peso credit line that they provide to foreign investors. Talked about the broad ownership and how that's a safeguard of the independence and the rigor of the lending process of FDN, and also of the work that FDN does on the anti-corruption side. If you haven't read that article, I strongly recommend that you do. It's a superb article. But to touch on some of those topics and many more, Clemente is going to give us a very brief presentation about FDN, and then we'll have an opportunity to discuss some of the aspects. Clemente.
Should I stop there? Maybe I'll do it from here. Well, thanks to Euromoney for the invitation to have I hope a conversation on what Colombia is doing and what Colombia hopes to continue to be doing over the next couple of decades. Just to remind most of the people here of that Colombia has been building credibility over the last 30 years. I mean, to be honest, this is not just a one case thing. I think is a process that has been built on good experiences. And one of the big foundations for Colombia and being able to achieve this transformation in different sectors has been obviously good foundations. And good foundations on the macro and the political side that has allowed Colombia to, over time, build stability and build predictability for investors and for lenders. We started in the 90s, with, I think, a very successful development of the bond market, the government bond market. And simultaneously, we started also the transformation of the energy sector, where we believe we built a strong asset class in energy, largely through privatization, but also through encouraging a lot of democratization of some of the government companies. And that developed, strong companies that have been able to build all the energy expansion of the last 30 years in energy has really been done through very strong balance sheets from these companies. Many of them are issuers, local and internationally, and I think that has been a very important achievement. And so on those foundations is that we started in the early, this decade to prepare also the creation of a new asset class, which is infrastructure. I think building on a lot of the bad and good experiences of what didn't really work in the last decades in transport, particularly, we had, unfortunately, 3 generations of PPPs in transport that really didn't work very well, largely because of the lack of a good framework, and also due to the lack of a good institutional framework as well. So those two were very weak in the transport. We had transformed the energy, but we didn't do the same thing in transport. So after 2012 is when the previous administration started really, I will say, a serious process of correcting a lot of the mistakes that we had done in transport, and try to build a similar kind of frameworks and institutions that we had in the energy side. And I think that's something that is starting to show. I mean, we did a PPP, we brought a new PPP law. I will say today a little bit too strong in the sense of moving too dramatically to availability payment systems, which in large projects with large construction phases could represent a big liquidity constraint, and I think that's something that we need to revise. I mean, we're currently proposing to the government, the new government, some flexibilization of the PPP framework to allow, and I'll mention it because we're doing something for the metro. We're structuring the metro for Bogota, the structure, and we're trying to use a flexibility approach to the PPP framework. But still, the PPP framework that we developed for the 4G, the big infrastructure road program, was a strong foundations. And then the whole transformation of the PPP agency, as well as the transformation of the energy development bank into an infrastructure development bank, which is FDN. And those were key, I believe, key institutional transformations. But also we learned, that it was important because of the size of the projects that we're doing and the number of projects that we're trying to develop through this framework, that it was important to have a strong contract. I mean, and I think people today are satisfied with the quality of the PPP contract that was built. It took 2 to 3 years to develop that contract, with I will believe, a good mix of how you share risk between private and public. I will say that probably the main limitation of that framework was all the pre-investment, pre-construction risks. I think the government tried to share them, which was a good approach, but we've seen in last years that maybe some of those risks should be completely transferred to the state, like the environmental licensing and especially the environmental licensing and the consultation with communities. That has proved to be very tough, even if it's shared, because currently it's shared. The risk, particularly the cost and the time cost, are shared between the government and the private. We believe that this is something that clearly should be transferred completely to the public, and so projects should not be awarded before those licensings have been achieved. And then maybe the third component that has been we've been building to create this asset class was also on the lending side, and that there is where FDN has taken a lead. I mean, first to really introduce project finance standards, which in the local market and local currency we did not have. I mean, actually our standards were relatively low, and part of that low standards we are paying, especially the local banks are paying some of that low standards with all projects, that unfortunately one of them got affected by the Odebrecht scandal. And now, I mean, some of the banks are having a serious difficulty to get their money back, from one of those projects that is being nullified because of the corruption problem. And because they didn't really have good standards, banks were relatively not very well protected. That we try to change with the 4G, to really create a project finance, international project finance standards, a strong security package, a thorough due diligence, an independent engineer, good present conditions for disbursements, and a very strong role for trust funds, to really manage the money. And I think those standards are substantially different from what we had in the past. And I'm sure this will protect banks from repeating situations that we had in the older generations. So based on that change is that we feel that we've been able to build a new asset class for infrastructure that has been the base for the 4G program. Just to give you a few updates on where we are on that, of those $18 billion program, out of which 14 billion were debt and 4 billion were equity, 30 projects. Now, today, we have basically closed, there are 17 financial closings, 13 final, for 6.2 billion, and 4 partial, 4.4 billion. 8 we did in 2016. 2017 was a relatively slow year because of the Odebrecht situation that particularly affected the local banks due to the legacy projects, you know, that I mentioned before. I mean, they were affected by the legacy projects that were not well protected, and that created a sort of a situation that made it less attractive, you know, to bring projects to closings. But this year we're trying to bring back confidence, and I'll show you why. I mean, what has been achieved. And I will say that, I mean, when you see this graph tries to probably show what I believe has been the biggest achievement in terms of financial or financial structures for a large programs like the ones we're doing with 4G, which is being able to create an asset class that is attractive enough to bring international banks, multilaterals, local and international capital markets, as well as banks. And I think that's critical for large programs, is to really being able to create an asset class that you don't rely on one source, that you're able to attract enough appetite from different sources. And I think, honestly, that's one of the biggest achievements of what we have done, and I have to take credit. I mean, my entity really was a key entity in helping on that process, not the only one, but clearly was very instrumental in that. I mean, with a lot of support clearly from multilaterals. I mean, and my partners, not only multilaterals, but even SMBC as a strong international bank, has been also very important on what FDN has been able to achieve. Thanks to that ownership structure, we've been able to speed up the learning curve and become a local leader, you know, in infrastructure in Colombia. So you see that by June of this year, we have raised this 6.2 billion. This is final closings, I'm not including there the partial closings. We had already achieved a good mix, you know, between international banks, capital markets, primarily cross-border transactions. I mean, and I'll talk a little bit later on the local part, but these were cross-border. I mean, it would be very difficult to have been purely local. And then the other component, the debt funds and FDN. By the end of this year, if we're able to achieve the 3 to 4 additional closings that we hope we will achieve. I mean, there are a few delays, partly due to the change in governments, the institutional side, especially in the ANI, the PPP agency. We had some slowness, I mean, some slow resolution of situations that has slowed down a bit some of the closings that we were hoping to have achieved by now. But hopefully we will have at least 3 more by the end, eventually 4. If we do that, we will have probably reached more than nearly 70% of the program with an interesting mix. I mean, and one of the probably more interesting achievements was first international banks. I mean, Colombia really had not had in the past international banks participating in local infrastructure projects. And we had them in energy, in dollars, but not in local currency or not in road programs. I mean, many of the banks that are lending now, the international banks, are actually the first time they're lending into roads in Colombia. So being able to bring them into roads has been an important achievement. Part of it thanks to the government providing a natural hedge by offering to provide a dollar. I mean, some of these projects were not self-sustained. They needed some government subsidies to compensate the tolls. Those subsidies, half of them were offered in dollars. That allow us to bring international lending. And then we came with local currency lending to the banks. So that added, so as you can see, I mean, part of those 25% in international banks, nearly 5% was funded by our local currency line to international banks. And the other important thing is debt funds have increased their participation, and these were 3 debt funds, you know, specialized funds. That was a way of bringing capital markets, of bringing institutional investors, especially local institutional investors, to lend to greenfield projects from day zero. And we've been, I think, very successful to now have nearly 11% of the financing coming from them. And then five bonds have been issued. Also during construction, taking greenfield exposure also is a big achievement. And I will say, largely thanks to a good combination of good investment banking activity with the credit enhancement we provided, we were able to bring them into investment grade, and that allow us to issue 5 bonds, cross-border, of course, but some of them in local currency, some of them in dollars. And then FDN, as you see, is increasing its participation from 11 in June. We hope to finish probably with 14, 15, that if I add the 4% to the international banks, is nearly 18% of the financing has been funded by FDN. So FDN is increasing its share and will have a significant share, but we'll later talk, but not overgoing on that, thanks to a big capitalization that we got from money that the government provided from a privatization. So, and we hope to do 11 more projects in the next 2 years, and for 5 billion, and that will close sort of this first, I think, very successful effort to finance a large toll road program, basically a PPP framework. And just to finish, there are challenges, of course, and I think it's important that we improve that. I mean, one of the most important, I think, issues that the new government, I mean, the government of President Duque, who just came in, is that they're focusing on where the problems were. I mean, there were very good things, but there were also things that were not working as well, particularly in the project implementation. There had been some weaknesses in the decision-making process in the PPP agency, partly because of what happened to the CEO of the agency a year and a half ago. I think a very unfair situation for him, but unfortunately, politics in our countries are very difficult. So that created a lot of fear in the administrations to take decisions. Now, the new administration is trying to protect these government officials to bring the agencies, the supervision agencies, to be more involved in the decisions. So then the public servants feel more protected, so we can speed up decisions. And also important improvement in the framework of how we do community consultation, because that has also been an issue, combined with some problem with some of the tolls. The new government really wants to involve much more the local politicians and the local constituencies to really make them aware of if they don't put the tolls, if they don't support that, they won't have the infrastructure, and not let the politicians sort of get away, and I think so. I think this new government is really putting attention to those areas of how we can improve the project implementation, and I think with those changes, we will really have a robust framework. We need to bring the local banks back, because even if we now have been able to achieve this diversification, we still need them, but that will come with some of the resolutions of the legacy projects that we want the new government to, and they are putting a lot of attention to be able to resolve those issues. So with that, I think that we will move to a stronger phase for this and for the things to come. I mean, Colombia has a huge needs, as you can see there. I mean, our needs for the next 15 years is close to $114 billion in needs. A lot still in transport, where we had the biggest backlog, big problems in the past. And I won't go into that, but we have a lot of interesting projects coming in the next 2 years. Some of them, we're structuring them in FDN. I mean, like the Metro Bogotá, the first line of the Metro Bogotá, which is an interesting project. We're going to do a hybrid between PPP and public works, sort of similar to line 2 of Lima, but hopefully correcting some of the problems that the Lima project had, particularly on on land acquisition in advance and managing a lot of the utility problems. So we are working with the entity to really help that move. And this is just some of the projects that we're supporting that will be coming into the market in the next 2 years. First PPPs on social PPPs. Renewables is going to be an important topic in Colombia in the next years. We are the last of the large countries in the region to bring, maybe because we had a lot of water, so we didn't really have the pressure that Chile or Argentina or others had. But we also want to move into that. So we will be launching the first bid in the first semester of next year, and we're supporting the government on that area. And that's it. You know, that I hope gives you very fast an overview of what's been done and what's coming in the next years.
It does. Thank you very much. That's a great overview, Clemente. And it raises lots of questions, and probably only got time for 2 or 3 of them. So if I can, you spoke there about the framework for energy and then the framework for transport, and then creating a bankable product. The next step of that, the development of the local capital markets and the local, talking a lot about the banks and helping them with their problems. What can you do to develop the local capital markets and get them more involved in the process?
Yeah, I mean, it's a little bit of a contradiction, and I have to say, because I've been involved over the last 30 years. I started with the debt market. I've been involved in all these segments from the 90s. I was the head of Treasury in the 90s, so I developed the government bond market. I mean, that was very important, and so I'm being very frustrated, that after 30 years of trying to build a local capital markets, we built a strong yield curve to support local issuance. We introduced new regulation to facilitate issuance of bonds. I mean, like a kind of a 144A kind of framework. So we've been doing a lot of regulatory changes and creating the foundations for local capital markets. But unfortunately, one of the biggest problems we have is on the demand side. We have very large players, but very few. So we are in the hands of 2, 3 very large pension funds. So there's a lack of depth of the local markets, and it's going to be very difficult to bring local capital markets to play a key role, which we want to, unless we work on creating more participation of more players. So what are we doing? I mean, clearly one of the areas is taking advantage of the Pacific Alliance situation, to try to bring more investors from the Pacific Alliance. There's some improvements in the framework to facilitate that pension funds in Mexico, Chile, or Peru can invest in instruments in Colombia. We ourselves, we're building partnerships with strong players in those markets to attract them. Recently we have approved, 2 days ago in our board, we approved an investment on a fund, this is equity, not debt, but an equity fund that is basically led by a Mexican private equity fund, which is bringing pension fund money. And we think as they come in, and that's why we decided to be an investor also there to support it, by bringing a fund manager that is Mexican, that will facilitate that pension funds from Mexico will start looking at asset classes in Colombia. We want to do something similar with Peru and Chile. So we're working on how we can use more the Pacific Alliance to bring more investors. We also need to reform the insurance side. I mean, annuities should be an important source of long-term money in the local markets. In Chile, it's been fundamental, for infrastructure. But unfortunately, in Colombia, annuities have really not taken off. We hope that this new administration has put emphasis on some of the regulatory issues that are still maybe limiting the development of that product. We ourselves are strengthening our capital markets capacity. We're putting together a DMC, that capital markets group, to support, basically to do market making, to support structuring, to partner with local and international investment banks to push for new transactions. So I mean, I think the next decade is really going to be focused on how we bring more local capital markets activity. But unfortunately, it's not easy because there are structural limitations due to the lack of of many players. I mean, unfortunately, I think a big mistake of previous administrations that allow consolidation in very few players. I mean, we started with 6 or 7 pension funds, we're now basically 2 very large ones. Big mistakes in terms of allowing too much consolidation, which has reduced the number of players. I mean, but that's something that's now the structural limitations that we're going to have to work and bring more players into the picture.
I know in that Economist article, you were actually quoted as saying that you can't just sit there and wait for this market to develop. Now, sort of the flip side of that, every development agency has this idea of additionality. I'm trying to do something that isn't going to be done by the private sector. And I was very impressed, I was stunned by those pie charts you had of how little you're actually participating in each of these and how much you're facilitating. How do you achieve that? Is that something you approach every single project? You say, am I crowding out or am I trying to crowd in? How do you achieve additionality?
I think that comes from the creation itself of the institution. I mean, I think, and I have to thank IFC for being, IFC model is based on keeping participations limited to maybe 20-25%. So they're able to mobilize more. So having the government this was something that we really focused a lot when we were creating the bylaws of FDN, was we want to replicate that model. So this is not going to be an institution that is going to put 75% or 60% of any project. No, this is a bank that is going to, from day zero, going to try to put maximum 25%. So it's by our policy, the commitment of our shareholders that should be the way we should approach. And initially, even we had to go be much below because we didn't have enough capital. So the challenge was easy at that point because we could not do it. Now that we have the capital, now that we have the resources, it's discipline. It's private sector discipline that we have in our board and our shareholders. And so I think it has to do a lot with the institution itself and how it's perceived and how its owners see this as an institution that has to be a mobilizer. We are judged by the mobilization capacity, not by being able to close the project. So it's not only closing, it's closing it with a large mobilization. So I think that's key if you really want to be an institution that is not crowding out, but is crowding in, which I think is a big challenge for institutions, especially development institutions. There's always the temptation to cross the river and go to the crowding out because the project is becoming very difficult. The local banks don't want to participate, so let's go. We could have done it, to be honest, in the last project, especially after the Odebrecht situation last year. Local banks were very hesitant to participate. We could have taken a lot of their shares. I mean, we could have gone to 50-60% in a project, but we decided not to, and that's why we had to look for international banks. We had to look for capital markets. We have to promote the debt funds because our role was to mobilize and not just to close the financial, do the financial closing of the project.
It's, BND has said something very similar yesterday, that they're moving towards actually reducing their disbursements and being measured on a metric of how much they facilitate rather than how much they do.
Exactly.
Now you mentioned about having the money to do that, but I also noted down from your presentation the financing needs of $114 billion. That's a lot. How can you leverage the capacity or finite capacity going forward? Is it about securitizations like the African Development Bank? Is it about secondary market sales? Or is it just about reducing the slice of that pie and doing more facilitating?
No, I think there are several things that we're going to be working over the next 5 to 10 years. But one clearly, as you said, is recycling capacity, both our capacity as well as the banks and the local banks' capacity. And I think securitization is one very important one. Fungible, relatively homogeneous bonds also. So we've been working over the last 2 years on these two products to help recycle our capacity as well as the other local banks, particularly local banks' capacity. One is trying to create a very standardized bond that we can actually pay back some of the, refinance some of the exposure of the banks that have been taken over the last 3 years and will be taken over the next 2. I mean, but the other one is securitization. So we are creating a securitization company with a securitization company. Colombia has, and I think we were talking about that before, Colombia has a long history of securitization. Fortunately, a successful one. We created a specialized entity, which is a Titularizadora Colombiana, for mortgage securities that has worked very well. So we have partnered with them and with some of the multilaterals to create like a spin-off of that one for infrastructure. And the idea is we're going to start hopefully next year to do the first securitization of loan portfolios. And we will be one of the institutes putting some of the loan portfolios in the table. But we want to bring other local banks to put it and then make a package and then maybe we'll have to do credit enhancements to that in order to bring them to investment grade and be able to start moving it. So that's one. The other part will be ourselves going to the capital markets, not only for bonds, because we will probably do that next year. We'll start leveraging ourselves in the local capital markets and international. But we also think that the next step, and it was mentioned in the Economist article, we know that in maybe 3, 4 years, 5 years ahead, we should expand the equity capacity through capital markets as well. So we are strong believers that capital markets has to play a pivotal role in the way we expand capacity in Colombia.
And equity capital markets outside Colombia?
Well, no, clearly, especially in bonds, our view is it's because of the lack of depth, we cannot rely exclusively on the local investors. We have to make sure that we have local and international investors in order to, so at least for the next years, we will probably be doing a lot of cross-border transactions because it's the only way of bringing both international investors as well as local investors.
Clemente, I'd like to ask you so much more about that, but I'm being told that we can't, and I know we're running behind. Thank you very much. This has been absolutely fascinating talk, and wish you well with all of these endeavours. Please stay put whilst we rearrange the stage for the next panel, and join me in welcoming Clemente.